Everybody's talking about the election.
Mm.
So for the next couple of weeks, it's going to be really hard to focus on anything else. And so a lot of what we're doing is trying to hold hands and tell people that we don't think that whoever ends up in the White House is going to have a big impact on the medium trajectory of the market. So you need to kind of sit through this near-term volatility. But then coming out of that, just a couple of weeks from now, hopefully, cross fingers, I think the focus will then return to earnings, which is really going to be the driver of the market. And there too, I think we're seeing pretty good trends.
Yeah, I kind of wanted to go there. I mean, we just had some of the big banks report. I mean, now we've got the rest of the S&P to come over the next couple of weeks, but the bank earnings, Karen and I were talking at the opening here this morning, they look pretty solid across the board.
Quite solid. And again, if we have the Fed continuing to cut at a modest rate, a more normal yield curve, activity is picking up in a lot of their like core areas. Credit's okay. So they have a lot of things to be really positive about. And then when you look in particular at some of those small cap banks, they're the ones who are particularly interest rate sensitive and will start to benefit from this new interest rate environment.
Hey, Kara, one of the things too, Paul and I were, as we were gearing up for you to join us, your background is just way cool. You've worked at a lot of well-known firms, whether it's Goldman Sachs, whether it was AIG funds. But what's interesting is you go kind of way back. Before you tapped into the investment industry, you were an analyst covering international political and economic risk, and you focused on Eastern Europe and Russia. One of the things that Paul brought up, which I thought was really brilliant, is that this idea that like we have another headline that Israel's saying a Hamas chief may have been killed in Gaza attacks, and yet the markets seem to take that in stride, or even if we see a blip, seems to recover quickly. What is going on in investment markets where geopolitical risk seems to be, they kind of just take it in and kind of don't seem to overreact? Investors don't.
It is quite remarkable. And you have to go deep into my resume to find that. But it's
We
interesting
did. We
because,
did.
I find international politics incredibly interesting, and these types of things that you're talking about are really, really important. But I don't talk about them all that often simply because US markets over time have shown us again and again that they can remain very well insulated from geopolitical risk. And that's a great benefit from being in the United States, which has, an ocean on either side. And if you look back, in fact, to when Russia invaded Ukraine at the time, I mean, there was a lot of concern, war in Europe for the first time since World War II, concern about grains and other commodity prices, oil. And very quickly, within a couple of weeks or months, that risk started to fade from markets. And we've seen the same in the Middle East. And usually the big way that these geopolitical risks sort of transition from wherever they start to US markets is through oil. And interestingly, over the last 12 months, we've seen oil come down, I think driven by some softer demand, particularly in China. But that transmission mechanism has not really reared its ugly head. And so US markets are able to really shrug it off.